Hi, I'm Dr. Charlie Peterson. I'm the author of Dude, Where's My Profit? The Accounting Finally Makes Sense mini course. Today I'm going to take you through a complete accounting cycle problem. We're going to review three categories of transactions: daily, adjustment and correcting, and closing. And we're also going to prepare the financial statements. Before we begin, I would like to reintroduce you to my backward C ledger. You'll notice that we have all the T accounts here that we'll be using in the problem. And what I've set up here is the accounts on the left side of my ledger, or the debit side, increase as debits. And the accounts on the right side, or credit side, increase as credits. This is a ledger that I use throughout my program as a way of making the visualness of the ledger easier to master. Now, we're going to start out with daily transactions. Daily transactions are the interactions of our business and somebody outside of our business, such as a supplier, a banker, or a customer, someone like that. These are external transactions. They take place during the accounting period, and they are the most transactions you have of the three. Now, before we begin to record the transactions in the T accounts, we have to bring forward ending balances from the previous accounting period. My accounting period for this problem will be the month of April, so I go back to my balance sheet as of March 31st, and I transfer these balances, these ending balances, onto my ledger to become beginning balances for the month of April. So let's go right down the list. We'll start out with cash, 700. I'm going to put a B beside it to indicate it's a balance. Accounts receivable, a balance of 300. Supplies, a balance of 100. You'll notice that these balances all appear on the increase side of the account. Here we have equipment with a balance of 5,000. And then we have accumulated depreciation with a balance of 1,000. Accumulated depreciation is a contra account where assets increase on the debit side, accumulated depreciation increases on the credit side. We also have a balance in accounts payable of $400. Mistakes are okay. Balance of 400 should be on the credit side, the increase side. Notes payable has a balance of 1,000. And we have, going down to stockholders' equity, we have capital stock with a balance of 3,000. Retained earnings with a balance of $700. All right. Now we're ready to record the transactions. And then we're going to balance the accounts, and then we'll do our first trial balance. Now I'm going to be recording the transactions directly into the T accounts. I'm going to bypass journalizing. If you wanted to study journalizing, that you can find that in another one of my videos. So let's start out with April 4th. Paid rent on the office, $200. Okay, so what we're going to do is we're going to increase rent expense by 200. When you pay an expense, it increases. And we're going to decrease cash by 200. Okay, so that takes care of that one. Purchase supplies on account, $120. So we're going to debit supplies, 120, left side. And we're going to credit accounts payable because we're charging these. 120 goes over here. Just remember, every transaction, debit and credit has to be equal. Then we completed work for a customer and billed her $480. All right, because we billed her, the money is owed to us, so we're going to put it into accounts receivable, $480, and it becomes service revenue, $480. We paid $400 towards the balance in accounts payable. All right, so let's decrease our balance in accounts payable by 400 by putting it on the decrease side, the debit side, and it's coming out of cash as well. There's my debit, there's my credit. Purchase equipment for cash, $600. All right, let's pay $600 cash, and we're increasing our equipment account by $600. Receive cash from a customer for work just completed, $500. That's like a cash transaction. So we're going to debit cash for 500, and we're going to put the $500 into service revenue. Paid a dividend of $1 per share for the 30 shares of capital stock outstanding. All right, now dividends is a transfer of profits back to the stockholders. All right, now dividends is another contra account. The other one was accumulated depreciation. While stockholders' equity accounts increase as credits, dividends increase as a debit. All right, so we're going to put $30 over here, and stockholders receive it in the form of cash, so we'll decrease cash, $30 there. On the 23rd, we collected $300 on account. All right, so we're going to decrease accounts receivable by $300 because customers don't owe us as much, and we're going to transfer it up to cash. There's our debit and credit there. Placed an ad in the newspaper and paid cash of $40, so we're going to debit ads expense for $40. Remember, an expense increases when it's paid, and it was paid for by cash, $400. We received cash for work just completed, $360. That's another cash transaction. $360 here and $360 here. There's our debit, there's our credit. And finally, we paid an assistant for 30 hours work at $6 an hour. All right, so we're going to go down to wages expense of $180, and we're going to decrease cash by $180. Okay, so these are all the daily transactions that have now been recorded. What we have to do now is balance the accounts before we can do our trial balance. So we're going to draw a balance line underneath the lowest side, in this case the credit side, and we're going to add up the increases and subtract the decreases, and we come up with a balance of $410. Likewise, supplies, we're going to draw our balance all the way across the account, parallel to the account title line, and we have a supplies balance of $220. You'll notice I'm putting a B beside these to indicate a final balance. Accounts receivable, let's balance this account here. We have a balance of $480. Equipment, we have a balance of $5,600. Remember, the balance is on the increase side of the account. Accumulated depreciation is already a balance, so we really don't have to do, let's see, we had some additional accumulated depreciation which will come up in adjustments. Let's see here. Accounts payable has a balance of $120. Notes payable already has a balance in it, $1,000. There was no change there. No change for retained earnings, no change for capital stock. Dividends now has a balance of $30. All right, now let's drop down to the expenses here. Wages expense, when there's a single number in the account, that is the balance. So I simply just put a B beside it. Same with ads expense and rent expense. And our service revenue now adds up to a balance of $1,340 with a B here. Okay, so now what we have done is recorded the daily transactions, and the final step then is to prepare what is called a trial balance. A trial balance is simply a listing of all of the accounts and their current balances. I have prepared one to kind of save a little time in this video, so let me just show you what it looks like. Here's my trial balance page. We're going to be doing trial balances for daily, adjusted, and post-closing balances. And you'll notice what we've done is we have just simply listed the balances. Here's $410 for cash here. It's a debit balance, so it goes in the debit column. Accounts receivable, $480 in the debit column. Supplies, $220 in the debit column. Equipment, $5,600 in the debit column. And then we slip over to the credit column for accumulated depreciation. Notes payable is $1,000 in the credit column. Retained earnings is $700 in the credit column. Capital stock is $3,000 in the credit column. Then we jump back over to the debit column for dividends. And then service revenue has a credit balance of $1,340. And then our three expenses, wages expense, ads expense, and rent expense appear in the debit column. When we get all done and you add up the debits and credits, these two balances should be equal. That completes the trial balance then for part 1. So we basically entered the beginning balances into the T accounts, and then we recorded the transactions, we balanced the accounts, and we prepared our first trial balance. Remember now, the daily trial balance is not yet up to date. We cannot prepare the financial statements from the daily trial balance. That's what we have adjustments and corrections for, which will be coming up in video number 2. Please go to my website, www.dudewhere'smyprofit.com, for further videos. Thank you.